Hey, what's up, guys? Back for another episode of Jack of All Trades here with David and Sam. Uh, we don't really have too much of a structure for this week's episode, so we're just going to kind of take a look at the market sentiment again and just touch base on a couple things that we've been seeing. Like, are we near the end of a bear market? Do we think it's going to turn around? What are some indicators that we're looking at? What are we kind of getting the feel for? So that'll be like a kind of a loose discussion. We'll just go from there. So first off, Sam, if you want to pull up my screen here, I just want to show this chart here. So this is actually kind of funny because I was talking to Brendan, who he was on some of the earlier episodes of our shows, and we were just talking about like all these different scenarios, like what do we think is going to happen. So I did all this on my phone, like all these lines. I just drew them in by hand on my phone. So I was looking, I was like, okay, well, technical analysis, what do I see, right? I see a top here, which is a pretty good support level. It kind of consolidated before it broke out. And we're kind of getting close to that low again. And then the major top that I think is right here, like the 340. So this kind of 340 to 360 area is like my main focus. And the reason for that is obviously because that was before we had COVID and everything just kind of tanked right down. You could say the 320 area too, if you want to get like a really big range, like 320, 340, 360. If this was kind of an intraday chart and I was trying to scale into a bounce or something like that, those would probably be the lines that I'd be looking at. What do you think about that, David, just off the top of your head? I don't know if you've kind of pinpointed a bottom based on your stuff yet, or...
Yeah, what's funny? I think we briefly touched on it like at the end of one of the episodes where I pulled a fib and it was right at like the 34 or 35 mark. And you kind of laughed a little bit. We're like, we have two complete different methods, but it's given us the exact like area of interest.
Yeah. Well, like volume's always the big thing that I look at, right? Like that's kind of like my main, like I look at the chart, and then if the chart doesn't kind of align with the volume, then I kind of consider it irrelevant. And like what I mean by that is basically like I'll draw a line, but if I don't see something significant happening in the volume at that line as well, then it doesn't really mean as much to me. So, like for here, for example, like obviously as soon as we kind of started turning over, you can see on the volume, if I zoom in down here, like this is back in COVID, like we were topping out, and then as soon like the very first red candle, even though the price didn't move much, you can see the volume here just picks up and then picks up. Like even the volume on this day here, where we only dropped from 337 down to 333, like only a couple bucks, the volume is basically double what it was 2 days ago. So like that's the kind of stuff that I kind of like to look for. So like that obviously becomes like a major area of interest, and then obviously we got that big wash down, but it's the same kind of thing. Like even if you go back here, this is when is this? This is 2019. So, and you can do this on any chart. Like I don't trade the S&P. I just kind of, I'm just kind of looking just for argument's sake. Like I say on the podcast every week, I just buy for investments. I'm not looking to, hoard my cash and throw a whole chunk in at the bottom by any means. I just kind of basically just do this for fun. But yeah, it's the same kind of thing here, right? Like, I mean, every time we kind of have a bit of a movement here, we get a big volume spike. So as soon as the market kind of drops here, get a big volume spike. And then up here, the reason, in my opinion, that this didn't break out is because there wasn't any more volume. So this is something I use a lot in my trading is basically like a double top sort of situation. So in this case here, like volume is your interest, right? So like volume is basically going to tell you how many people are interested in the stock or the index or whatever it is, and how many people are trading it, how many people are buying it, how many people are selling it. Like just think interest, right? You go to the store on Black Friday, I mean, the place is packed, right? It's going to be chaos. There's going to be a lot of pressure. There's going to be a lot of stuff selling. There's going to be a lot of stuff flying off the shelves. It's the same thing in the stock market. So in this case here, this is one of the things you guys can kind of use as a trick that I look for short selling is if you get a top like this that's on big volume, and then it goes back up and it retests that same level. And here you can see our volume is basically half what it was the first time it hit. That to me tells me that nobody cares. Like nobody's interested in buying here. Nobody's trying to push the stock to new highs. There's just no interest. So when this thing kind of just fumbles around that level for a while, like to me, like that's basically a guaranteed short, like no brainer. Like, yeah, that thing's going to sell right back down because nobody cares. Like it's up near the highs. It's up near a potential breakout level and there's nobody looking at it. So why is it going to break out? It's not, right? So that's just a little trick that I use in my trading. But yeah, that's kind of how I correlate volume between levels. So like if I'm looking at a level that has a lot of volume, and then we, if it's a bounce or if it's a resistance, so we come back to retest it. If I'm not seeing a lot of volume on that level again, odds are it's probably not going to break.
I should mention for a while when I first started TA, I thought there was a difference between the red and the green volume candles or the volume bars. I thought, oh, if it's green, there's more buyers. It's not, right? It's just volume is volume. It's just they just colored it green because the candle closed green. That's it. But
I know some
when
brokers. Sorry, what were you saying?
oh, but no, I was just ending that off. I was like, I just know that the volume, the volume will make it green if the candle closed green. So if the candle closed higher than it opened, then that's when the volume bar gets green. But then that's why after a while I just grade it out. I'm like, volume's volume. There's no like more buying or more selling. It's just you don't know.
Yeah, I think you can. Like some brokers actually do let you split it, so you can see. I don't know if
Oh,
like I use Trade Zero. I don't know if Trade Zero does it because I don't use volume like that specifically, but I think Interactive Brokers did. I think DOS Trader does as well, where you can set it so it'll split. So like the volume, like if you look at a volume candle like this, for example, down here, like or just take this big one for argument's sake. So like if it was this big red one, it would basically like say right around here. From there down would be green, and then just a little top bit would be red. And that basically tells you like buying versus selling. So even if it's a green candle or a red candle, it splits it so you can see the kind of size that's moving in and out of it. And like that doesn't help me at all. Like it I don't see a use for that personally, but there is some brokers that do that for you.
that's some Gucci data. I wonder if they charge extra
Yeah,
for it. Because
it
I'm one
just
of
seems
those
like
idiots that would
noise.
pay for it. I'm sorry?
Yeah, it just seems like noise to me. Like I don't like. I'm sure it's helpful to some people, but it's just I just keep things so simple.
You know what it is?
Um, but
It's because it's not because I know what to do with it. It's because I'm so curious. I would pay for it for like a month or two just to see if there's anything there. It's like
yeah, I
now that
don't
I
think
know
it.
it exists, I'm just like, hmm.
I wonder if Trading View might even have it. I don't think it's that uncommon,
Bet you have
but
to pay extra for
maybe I wouldn't pay for it though. It's not really
it.
like I don't know. I never found it helpful. But anyway, so basically, like going back to this, kind of like again, we were just talking in the group the other day, and I kind of figured there was like a couple different scenarios here. So like we're obviously like anytime you get something like this, like whenever I look at charts, I always just look at it as if it's on like a short term time frame, like on a day or a couple day or a week, because like that's the kind of time frames that I trade in. So when I see something like this, this is obviously from 2010 up to 2022, and like I'm basically just looking at this like, okay, let's pretend these are 5-minute candles or 10-minute candles or 1-minute candles or whatever you want. Like, what do I see? And like this is what I see. So I see this uptrend line where the stock's going up clearly. The first time we really tested it hard was in 2018. We came down and then it kind of rebounded, and then it went slow and it went slow again. And then we had the COVID drop, and I didn't pick any of this up like in real time because like frankly I just wasn't that involved in the broader markets at the time because I didn't have the money to invest. I was just kind of on the sidelines doing my thing in small caps. But in hindsight, looking back at this, I mean, this is like man, if I had seen this at the time, this would have been such a clear signal to just fucking load into this. Because like, remember David, like maybe last year or something like that when Tesla ramped. I'll pull the chart in a second, but remember how I talked about when it just goes below that uptrend line and then it just creeps back over it. That's like major red flag for shorts. That's like all the sirens going off. Like get the fuck out because this thing's gonna blow the top off. And that's exactly like it's just so funny that it happened here on the S&P. So like it dipped below that uptrend line that had been holding for 10 years, and then it popped right back over. And as soon as it popped right back over, I mean, we had the most explosive move that we've seen in like, I don't know how long, 15, 20 years. Like, so I just
Yeah.
thought that was really wild. And like, I'll pull up Tesla just really quick. We went over this on one of the other podcasts, but I'll try and remember where it is so I can show you the same thing here. It was right before. Yeah, it was right here. So I did the same kind of thing here where I drew that uptrend line, and it's a bit different, but it's the exact same kind of setup where you have this really long term, a couple year or year and a half uptrend line. Whenever a stock pulls really far away from the uptrend line, it generally wants to come back to it. Like the further it gets away, the harder it's going to fall. It's very rare that a stock would like do something like this where it kind of comes way up like here and then it just kind of, consolidates sideways up at these levels and then takes off again. Like usually when it pulls away from a major trend line like that, it wants to get back to it. So Tesla did the exact same thing, only a little bit of a different layout. We talked about this before, where it kind of just stuck to the underside of that trend line, and then literally, like, you zoom in. I mean, as soon as this thing creeps over, it just sits there for a couple days, and then look, you get this first big, like, people are kind of waiting for 2-3 days, and then you get that big volume push gap, and then just fucking rip, right? So I just think that's so cool. That's the exact same thing that the S&P did.
Crazy. That happened right at earnings. It broke trend, like, was that the 2 days before earnings, and then it went sideways. And as soon as earnings came out, it just went boom.
Well, it makes sense, man. Like a lot, like the people that you don't want to say manipulation or all this stuff, but like people run these stocks, right? I mean, there's people out there with a lot more money than any of us that manage these things and make them move, right? So they're not idiots. Like they know everything that we know. They know technical analysis. They know that if you look at the S&P here, for example, I'm not saying this happened on the broader markets, but for example, if this was a stock, they know that, like, okay, this thing whipped down here. So as soon as we break that line, I know that everybody that's chasing this thing short is just piling into this thing. All the longs are selling because they're thinking, okay, it's broke the uptrend. I'm selling my stock. It's broke the uptrend. I'm shorting the hell out of this thing. And then as soon as you whip back over that, what happens? All your longs are gone because they've already sold. So there's no selling pressure. All your shorts are now in a red position because they just piled into this thing thinking it's going to tank. So what happens? You get massive uncontrolled buying pressure from shorts covering. Again, I'm not saying that the S&P was a massive short squeeze for 2 years, but just based on this pattern, like that's essentially what the psychology is behind this pattern. That's why I find it so interesting that it happens in something like the S&P, where I'm assuming that move wasn't caused by shorts covering, but obviously you had stimulus checks and all this other kind of stuff. But that's what I mean, right? You have all these things coming into play when that move happens technically. So, what are people looking at? I mean, it's everybody sees the same stuff.
You know what? You might be onto something, because I don't know if you remember. I don't remember if it was the middle of 2020 or middle of 2021 last year, but we started hearing about all these hedge funds that were over leveraged and started busting. There was like that really big one, Tiger or something, or I forgot what the hell the name was, but they started busting. I'm like, how do you bust during like one of the biggest moves of like the stock market's history? It's like, you must have been short, you bastards.
Yeah, they
Right?
probably were. Because I remember clearly. Like again, I wasn't involved in the broader markets, and like I could kick myself as much as I want, but I didn't have the money to get into it anyway, so it doesn't really matter. But um, yeah, that's like one of those things that happens, right? It just reclaimed that line, and then if all these hedge funds are piling in here short, I mean that could have been enough to really send this kind of move going up. I mean that could have been the kicker, right? So
Yeah,
you,
my
you don't
buddy.
really know, and then that's
No, go
sorry.
ahead. No, go ahead.
No, that was pretty much all I had to say. Yeah.
I was gonna say my buddy. I forgot what Credit Suisse. My buddy. I shot a wedding. I think last year. I met up with it's a bunch of high school friends. He works for Credit Suisse now, and I was talking to him. He's like, "Yeah, our fucking bank lost $3 billion because of that one fund that blew up. That fund borrowed like 10 or 13 billion from a bunch of different banks, including Credit Suisse, and they blew up. And then all these banks are just write off billions."
Yeah, so it happens, right? And if you're talking, billion, like tens and 20 billions and billions of dollars, I mean, it can have an impact. I mean, it doesn't have a huge impact. Like, the market trades basically trillions every day, but it does still have an impact.
You know what? That's what
But so
scares
this,
me.
this is just, yeah,
Sorry. No, I was saying that's what scares me, because what he was explaining to me was like these funds only have like maybe a couple 100 million, but they figure out how to leverage their money because it's been such a great market for like 10 years. So they go to the bank and like, yeah, let's borrow, 10x leverage from you. It's like, okay, the bank thinks so that's not too bad. They have whatever assets, but then they go to the bank next door, like, can we borrow some money too? And then suddenly it's like your $1,000 becomes like $100,000.
yeah,
That's why they're all
yeah.
blowing up.
That's risky, man. Well, it's like Warren Buffett. That's like one of his golden rules is never trade anything but cash. Like he always says, like, don't ever leverage anything. He's like, if you don't have the money in your bank, don't put it in, because that's how you can kill yourself, right?
They take other people down with you too.
Yeah. And that's the way I do it too. Like I've never ever taken out like a line of credit, or I know, like, I know some of our friends do, but I've never in my life like pulled a line of credit to try and make money in the markets, because that can go sideways on you so fast. And for a guy that trades short term small caps, I mean, I don't have that kind of risk tolerance.
I'm just gonna say, I actually never thought about it, but your short you have like what they give you like what 5x leverage? I'm so surprised. I never heard you say use it.
Uh, Not really. No, like most of my positions are like I can use. I'm sure I've gone into it a couple times. Like, if you have say you have $10,000 in your account and you take a short position that's 12,000. Like, I'm sure I've tapped into it. I never really pay attention to like the actual dollar size of my positions, but like it's not something that I'm like holding for a long period of time, and I always have a predefined risk. That's where these guys get screwed, is that they just like they look at like like how many people are short Tesla. They look at it and like, oh, they think this, that, the other thing, and it's undervalued. Well, say this was the chart here, and they're like, oh, okay, well, I'm just gonna short over here because I know that this thing's overvalued, and then the market goes, yeah, haha, surprise, we're gonna move up another 40%, and then you blow up like AMC, GME, all that stuff, right? Like the companies are garbage, they're worthless. That doesn't mean the stock price can't kill you. That's what a lot of people don't understand. Even Jeff Bezos said that once, where he said the stock price is not the company; they're two different things. And it's the same thing we're seeing now. Like the S&P is not the economy; they're different things. Like the stock market is not the economy. And I think that was made abundantly clear during COVID, because we had this little dip because everybody was just scared. They thought it was the end of the world. And then we just went straight the hell up for 2 years. And during this whole time, how many people did you know were losing their jobs? How many people's restaurants and businesses were going under? How many people were going broke? Like, how many people were sick and dying? Like, you take your pick. And so the economy was a complete disaster, and the stock market is ripping. They're different things. A lot of people forget that. And that's kind of what like brings me back to my original point, is like, that's why I just look at like, a lot of people probably think it sounds stupid, but I just look at this stuff. I just look at technical analysis, because the chart is the chart. It's not the economy. Like, yes, I think the economy is obviously in the shitter and it's not doing great, and there's all these problems, and you hear about everybody who can't afford gas, and food prices are going up, and like anybody who's a student or anybody who's living in a difficult situation. I mean, gas and food prices go up. If you're living on the edge, like now you're screwed. So like it has a huge impact on a lot of people. So, I'm well aware of that, and I'm well aware the economy is bad and people are losing their jobs. And there's also a huge chunk of people that just don't want to work. But like, that's also been talked about for a really long time. And the market tends to move in a direction, could be a year and a half before the actual economy does. So, and honestly, I think that's kind of what's happening now, is like what we thought was supposed to happen down here in the middle of 2020 is happening now. It's just a year and a half delayed.
Really good way to look at it. That stretch where we just ripped, that was all like the Fed's money printing. Like that money never existed before and just suddenly showed up in the market, and people were like, what do we do with it? Let's buy some assets.
Yeah. Like that whole move is basically fake, right?
But remember during that whole period too, like it wasn't just the stock market popping. Like people were buying art, collectibles, fucking NFTs, like everything that's an asset. People were buying it up.
They had free money, man. Like, what are you gonna do? If you have free money, like that's what this whole friggin' chunk is. That's all just
Yeah.
and that's kind of why I like it in small caps, is it's kind of like a barometer. And that was one of the other things I want to mention too, is like we had basically 2 years where like every single day there was like 5 new runners in small caps. Like there was always something gapping up. There was always something running. There was always some excitement. Like that doesn't happen. Like normally you get like, you get like a few weeks or a month where like things are pretty hot, and then it kind of dries up for another couple, like 2, 3, 4 weeks, and then it starts to pick back up again, and then it kind of dries off again. Like it's kind of like these slow waves where like things are happening and then things aren't happening. But like when things are just happening nonstop for 2 years, I mean, that's like, that shouldn't happen. And like that was kind of the other thing that I wanted to mention as well, is like most of this year, like things have been relatively slow. I mean, obviously in comparison to the past 2 years, but in small caps, which is like, small caps is kind of my barometer for retail traders, because like obviously if you get anybody who's a new trader, like everybody was a day trader in 2020 because it was the cool job. And it's like, you see something gap up 30%, and it's like, oh, this dollar stock is now at $1.80, and like it's got this big news and everything's all exciting, and everyone's like, oh my god, I can put $10,000 in here and it's going to triple overnight and I'll be super rich. And then it just tanks, and it's the same old story. But that's like when people are getting into that kind of stuff, that tells me that people are like starting to spend money again, right? So that's what I've been seeing the past like 3 weeks. Like small caps have started to like heat up pretty efficiently, pretty aggressively, which I don't know if it means anything. Like I don't know if it's just kind of a little blip, but like it's more so than it has been over the past like 3-4 months. So to me, that tells me that there's at least some level of interest of people, basically trying to hit the lottery again, because that's all it is. So there is some people starting to spend money again on the retail side of things.
That's really interesting. I wonder if that cadence you were talking about before, like it would die down every couple of weeks. It was just like people waiting for the next paycheck from the real job. Like
Yeah,
they get
could be.
right, they get hosed, and then it's like, fuck, you wait for your next check. It's like, all right,
Yeah. Well, it's the funniest thing, because usually what happens is like you'll have like one massive runner, like you'll have one stock that goes up like 300%, and then everybody's like, okay, it's on, right? And then like for the next few weeks, like it's just craziness again. There's stuff running all over the place, and then like the moves just kind of like slowly get smaller and smaller, and like as people lose all their money and they kind of like lose interest and they get frustrated because they're not making millions, and then it kind of like tapers off, and then it sort of dwindles into nothing. And then all of a sudden, like, you'll have this like sort of slow, kind of boring, easy market where like you can kind of short everything and it'll just fade off and there's not really any excitement. And then all of a sudden, once all the shorts get too comfortable doing that, then they'll get in bigger and bigger and bigger size. And then all of a sudden you get that one that just goes over and they're like, oh, the past like, 2-3 weeks, everything's just kind of been like fluttering along. We'll give it a little bit more wiggle room, and then fucking boom, you're off to the moon and blows you out. You get another 500% runner, and then everybody else who's just like, okay, it's on again, and then they throw their money back in. You get another few weeks of excitement, right? That's kind of the way it works.
I can't believe you actually see that as small caps. That the whole time I'm in my head, I'm imagining. You ever see that chart, the psychology of the market psychology of like the crash and the bull, whatever. It's like there's you start off with yeah. So it's like that's exactly what I was imagining in my head, but you're seeing it real time playing out in these stocks.
Yeah, it's really funny.
I don't see it in the large caps.
No, well, large caps are just so consistent, right? Because it's all well, it's not all, but it's mostly hedge funds and things like that. Like the only time you really get like retail action that's tradable is if you have like a stock that's gapped up on news, or it has earnings, or it has some reason to draw retail attention. Otherwise, it's just algorithms just chopping away at it, and it's just hedge funds, and they're very, very difficult to trade unless there's some kind of catalyst behind it.
Yeah. So that makes sense then. It's like pure small caps are like pure or more majority like retail, and then maybe some sharks like you guys, some professionals, and then that's it. It's just like anarchy, or just pure emotion. You can see it in the charts.
Yeah, that's exactly what it is. But that's like, so like to this regard, it was like this is kind of what I'm hoping is going to happen to some respect. And the reason I kind of drew this is like I figured, like, in my mind there's two plausible scenarios. We're either going to hit where we are now, or maybe we'll go another 20 points lower to like 340, and then we'll kind of start forming some level of a base and turn around. I don't know how fast it's going to be to come back up. I think the more likely scenario is that we come down to this this long-term trend line. And like I know like a lot of people I've talked to that know more about financials and the economy than I do by far say that they don't think that's really plausible, because like for it to come down here, we basically have to be 2026 before we hit new highs, essentially. Like it's going to take a long time. Like we're talking 4 or 5 years before we get to new highs. And like to me, that doesn't seem totally unreasonable, just because of the kind of move that we had and sort of what is happening in the economy right now. Like you got to realize too, like stock prices are coming down, but the real estate market really hasn't come down yet. So like, are we going to have a situation where the real estate market starts crashing soon along with the stock market? Because that's when we're in a recession. Like we're not technically in a recession yet, but if we have high gas prices, high food prices, stock market's already coming down, the fourth thing is the real estate market. So if the real estate market starts crashing, that's when I think this could really take 4 or 5 years to get back. I don't think that's going to happen, because I think what's probably going to happen is the stock market will start to rise. I think the real estate market's going to come down a little bit, because I think it kind of has to, or at least stay stagnant for a while. But as long as those two things aren't working together, like if the stock market starts to come back up and then real estate starts to come down, that's okay. It's not going to kill the markets because people will have that offset, right? Like people that have real estate generally invest in the stock market. So they'll start making money on their stocks again, even though they're losing a bit on real estate. People will be okay. It'll just kind of be like this lull of a market. So I think like in my mind anyways, I don't know what you think, David, but in my mind, it kind of is coming down to the real estate market from what I can see. Cause I think if the real estate market holds up okay, I think we'll probably get something like this where we're basically going to hit new highs like in a year and a half, maybe 2 years sort of thing. If the real estate market starts crashing and the stock market keeps crashing, then I think we'll probably come all the way down to this long-term trend line. And then we're probably looking at like, 2026 kind of thing before we might get to new highs.
So I'm like the pessimist. I'm like the worst case scenario kind of guy. And all day I think about the worst case scenario of this thing. And I'm actually really frightened because there's like a bunch of factors that like it's going to be triggered by the price of energy. That's going to be the trigger. If let's say the war ends soon, or it doesn't escalate to a point where it's worse, then we'll be fine because everything goes back to energy. Like food production, transport, everything's all about energy, right? Even heating prices. We go into winter, and natural gas prices are high. A lot of people are going to suffer, right? So I think that's the trigger. But if that triggers the worst case scenario, I think it'll easily hit that target you have, the trend line that you have. And it's because like if you have people deciding what am I going to pay for, heating my home, driving to work, or my mortgage, what happens, right? And then you have the situation where I think a lot of people might be losing their jobs soon. Remember, I don't know if I'm pretty sure I sent that link in the group where it's like there's a website tracking layoffs right now in the tech sector. Like Peloton was like out, like just fired like 2,800 people, like just across the board, like all these overpaid engineers, computer engineers, suddenly are losing their jobs. And there's ones they're posting, they're like they had an offer and suddenly it's like rescinded, or they're just not calling, the company just ghosted on them. Like it's not good. And those guys are the ones that were bidding up like the home prices in many of the major cities, including Toronto. We have a lot. We're like the north, the tech hub of the north. So like there's a lot of these factors at play here right now. It's like we're at that point where it's like, okay, we can recover if nobody blinks, nobody rocks the boat, we will make it through this shit, right? But then,
Yeah.
One fat guy lets a fart rip, we're fucked.
Yeah, it's literally, yeah. It's kind of like everyone's just kind of like, okay, let's all just be cool. It's kind of like when you walk into a room and like everyone like looks at each other. It's like, all right, let's all just be cool. Everything's gonna be fine. Nobody make any sudden movements.
Yeah, exactly. That's the way I've been feeling for like a week and a half now. I'm just like, oh fuck, oh fuck, oh fuck.
Yeah.
Yeah.
I know. Like that's like I think that's kind of the main point of this this podcast, and like we've talked about it for the past couple of weeks, is like I just like to keep reiterating this because like I think it makes a lot of people stress out when they see stuff like this. I mean, like obviously, like I'm sure there's a huge portion of people that started investing like mid last year, right? So if you started investing, like people like in my age group, right? Like a lot of my friends started investing like at the beginning of this year, so like all they've seen is like, oh great, all the money I put in has been cut in half. Like, and like they keep messaging me and stuff. I gotta keep telling them like guys, like what was your plan when you put this money in the market? Like, were you planning on making a huge bank and selling it in 2 months? Okay, yeah, then maybe you should like, reconsider what you're doing. And that should have been your plan ahead of time. So, why are you so far down in your position? Luckily, none of my friends did that. They all say, oh, well, I was planning on, taking this money out in 6 years to buy a house, or I was planning on, leaving this in here until my retirement. And then, my answer is always the same. Like, then what are you worried about? Like, just relax, man. Like, it doesn't matter if the markets are down right now. Like, yeah, it's scary. Yeah, it sucks. Like, nobody likes losing money, but that's why it's so important. And we always talk about, there's a huge difference between trading and investing, like huge difference between trading and investing. If you're trading, you got to have like a firm stop. Like if it gets to here, I'm out. That way, when you get into the stock, okay, if I put this money in, the most I'm going to lose if it hits my stop is $1,000, and I'm going to make, 5,000 if it goes in my way, whatever the situation is. Like, you need to know that beforehand, because if you just throw your money into the market and you say, oh, okay, this is a trade, like it's just going to go to the moon, and like, I'm just going to dump 10 grand into this stock, and you think it's going to rip up and then it starts tanking. Well, now you're in panic mode, and then you're going to start doing all this research and trying to convince yourself to stay in the stock and think, oh, maybe if I just wait it out, and it's not the same thing, right? Like, like when we're talking about buying stuff and being comfortable, we're talking about buying like really good quality companies, like buying the S&P, like, indexes, things like that, that you basically know are safe. And like, that's what I've said a million times before too, that like, if the S&P just sells off and it goes to zero, I mean, my financial losses are going to be the least of the concerns, because that means the whole American economy has collapsed and it's going to be like a complete new world order. So that's like, a couple bucks in the stock market is going to be the least of everyone's concerns if that happens. So I don't think that's going to happen anytime soon. That's why I'm not worried at all. And that's why I keep saying on here every week, I just every month I just put, X amount of dollars into the stock market. Like I was buying stocks 6 months ago at the highs, just the same amount as I'm buying stocks right now. And the reason I'm still doing it is because all the stocks I'm buying and the indexes I'm buying, I know are good companies and I know that they're solid. I mean, like, you can look at the financials of some of these good companies and you can see that, they're making billions of dollars. They have, they have no debts, like all this kind of stuff. And it's like, why would you be worried about that company going bankrupt? Like if we're in a recession and they're still showing these like unbelievable numbers and they have no debts, then what are you worried about? Just hang on. And I mean, it'll come back. It's only if you're in shitty companies that are speculative because you're trying to hit the lottery. That's when you got to be worried.
Yeah, that's a really good point. Like you were talking about it earlier. I think people associate stock price with like company performance. Like, no, that's just the stock. It's independent of how well the company is doing. Like, how many times have we seen over the year where a company will report like record earnings and you just see the stock sell off the next day? It's like, what a bunch of idiots! Like, what the fuck?
Yeah.
Right? These are
Yeah.
real people behind real companies. We were just talking in the chat the other day, like me, you and Brendan, like I even said, like I probably bought in a little bit early, but we're still buying because we see value in these companies. Like you can't time the absolute bottom, but you see value. So the question is like, am I comfortable buying here?
Yeah, exactly. And that's the golden rule at the end of the day. And it's like, any long-term forecasting book that you see in the stock market, you can run any scenario you want where you can say, okay, like I'm gonna take a 40-year period, and like people have like I've read enough books now and enough people and enough studies where like this never works in your favor. Like the guy that tries to buy, like, okay, if you nail every dip perfectly, like let's just say like, every like you put X amount of dollars in every like once a year, say for argument's sake, and you have say $50,000 you're going to put in once a year every year for 40 years. If you hit whatever the lowest dollar value is to the T on the year in any of the major indexes versus the guy who's taking that $50,000 and investing, whatever, $5,000 a month or 4,000 or whatever it is to match the same amount over the year, the guy that's just blindly investing on a regular basis always comes out on top 100% of the time. And that's what I think people need to realize is that, oh, I don't want to buy here, I don't want to buy there. Like, sure, okay, if the markets are selling off like crazy now, like, yeah, it's probably not a bad idea maybe to hold off a little bit on investing and just accumulate cash just for a safety net. Because especially if you're kind of tight financially and, you don't know how much gas prices are going up, you don't know how much food prices are going up, like save for that. Don't save because, you're trying to nail the bottom and be that guy and this, the hero that hit the bottom to the penny and then made, 200% or whatever you're trying to do. Like that's kind of the way that I always think about it. And that's kind of the way that I explain it to people too. Cause I think it's scary. Like a lot of people get scared. I mean, you and I don't like seeing our accounts drop this much. Like, it's a lot of money that we used to have that we don't have anymore. But at the end of the day, that's really what you got to remember is just the long-term outlook, like the time. It's always the time. Like, what was your time outlook, and whatever your time outlook is, as long as you're okay with that, then just relax and just keep doing your thing.
Yeah, that reminds me. I read a similar study to what you were quoting. They were like saying, comparing like how many up days there were versus how many down days, and then the percentage moves up and down. And they're like saying if you just kept your money in there, you would have benefited way more than trying to time your exit or trying to avoid a drop or trying to time a bottom. It's like, let's just keep your money in there. You're fine.
Yeah, and that's literally Warren Buffett's whole thing. I mean, he's the greatest investor of all time, and that's he's the simplest quote where he says, the stock market's a vehicle to transfer money from the impatient to the patient. I mean, it's literally that simple. Like it really is that simple because you're never going to nail the tops and bottoms. You're never ever going to do it. Nobody can do it. It's not possible to nail the tops and the bottoms all the time. So just invest for the long term. I mean, if you are a trader and you're a new trader, I would suggest, sizing way down. Like, don't use as many shares right now because the markets aren't, as strong as they used to be, especially if you're a long bias trader. And if you're a short trader, I mean, don't take shitty setups. And, if a stock's only up 5%, don't short it just because you think it's the only stock moving. Wait till you get the kind of move that you're used to seeing, and just just take it easy. I mean, like, it's times like this where a lot of people die, and I can't tell you how many people I've seen on Twitter that are traders that are they're just gone, man. Like I used to see stuff from them every day, like, oh, another $10,000 day, another $50,000 day, like nonstop for 2 years. And then all of a sudden it's just like, you see them post a few big ass losses, and then it kind of flutters away. And like now all of a sudden they're like not even on Twitter anymore. So it's like, what happened? It's like, well, I know what happened. They didn't know how to trade, and they were just they were just in a market where you could just buy anything, and even if it dropped 50% right then, it would still bounce and you'd still make a killing. Well, now if you do that, it just keeps dropping, right? So just, if you are a trader, just be careful right now, because it's times like these where the goal is to protect your capital. It's really not to make money.
I was gonna say, uh, like you talk about your trading, but then and you like what you trade like the first 30, 45 minutes of the market, but then sometimes you mention it, but I don't think it gets mentioned enough, like how much prep work you do beforehand, like the night before, and how many years of like of refinement it took for your strategy to be formulated, right? And like these traders, they were trading, they couldn't separate what was the market and what was them, and which factor was more of an impact on their success. Like, was it their skills or was it the market? All the idiots that lost the money was thinking that it was their skills when it was really the market. Whereas, like, if you have a defined strategy like you, it's like, what your strategy is. It's very obvious. The market will help, but even without that, what's going on.
And that's the way to do it, right? And I mean, I've been trading since the middle of almost 5 years now, like since 2017, and like I've seen enough general market ups and downs. I've tried enough different strategies that I've kind of I've honed in on what I know works and what works for me, and that's all I do. I just focus on this one particular style of trading, and if I don't see what I need to see to be confident to make money, then I don't do anything. I just leave it. And if I don't see anything, okay, well, we'll come back and check again tomorrow. If I don't see anything again, all right, well, I'll check again the next day. I'm not just like, that's one of the hardest things I think with trading, is that I was even talking to my wife about it the other day, where it's like, it's not like anything else. Like, it's not like playing guitar or riding a bike or learning a sport. It's not like, okay, you fell down, get right back up and try again. You fell down, get right back up and try again. It's like, no. In the stock market, it's like, oh, you fell down? All right, get right back up and now just wait and see if anything happens again. And then you wait, and then it's like, okay, I'm still not seeing what I need to see. And then you keep waiting, and then you see it, and then you fuck it up again. And it's like, shit. Okay, I want to try it again. Like, I know what I did wrong. And then you wait, and you still don't see it. And then you're looking around, and then you kind of forget about what you did wrong last time. And then it shows up again, and then you fuck it up again. And it's like, so that's why it's just like, it's this weird thing that's not like anything else, where it's not like you can just keep like, okay, I'll just keep trying and trying and trying. Like, it doesn't work like that. You have to be super, super patient. And that's like, that's why it's so hard. That's why I always say, trading is, it's simple, but it's not easy. Like, it's a very simple thing to do, but like, to sit there and like, a lot of people, I think, get this mindset, especially if you are like genuinely trying to learn it, like as a job and as a real skill, not just kind of like, YOLOing your money into random stocks. I mean, you kind of get in this mindset. And like, I had this problem in the past, and every now and again, like when markets are slow, I still kind of like get this a little bit, and then I shut it down, where it's like, okay, I spent 15, 20 hours over the weekend researching and analyzing everything, and like, I'm ready to rock. And, I put all this time and effort in, and then it's like, okay, like the stock market owes me now. Like, it owes me money because I put all this work in. It's like, no. You can put all that work in and then just pay for it if you take a big loss. So, it's like, it's this really weird, twisted system. And that's why it's so difficult.
Yeah, it's probably like some like the mental, emotional version of like Navy SEALs training, with like you have zero control. You don't call the shots for anything, no timing, no nothing. You're constantly being slapped saying you're wrong, you're wrong, you're wrong.
Yeah. Yeah, exactly. And then you just have to suck it up and keep doing it anyways.
Yeah, but to your point, I've never thought about it like that. But you're right. It's like It's like if you miss a shot with basketball, it's all right, I'll just go pick it up and shoot again. Now it's like, no, you hold the ball. We'll tell you when to shoot. Like it's like you just have to
Yeah.
stand there and fucking just take that shit.
Yeah, exactly. It's like, but then you don't even know, right? Because like it's like this weird combination between like art and data and science. Like it's like, you know, you have the setup. It's like, you know, like if you look at any chart, it's like, okay, well, I had the setup like we were talking about before, where I was like, okay, you have a high volume push, and then when you hit it again on lower volume and it starts trickling off, like, you know, that's a short, but it might not be.
Yeah.
Even though it should be, it still might not be. So you got to be ready to cut it, right? Even if you're wrong. Like it's just like it's like you have all this data, but like there's no way to trade without risk. Like anytime you get in a trade, there's no strategy that's 100%. So you always are putting risk on the table, and you have to be comfortable with that. And it's really hard. And like, you know, that's one of the hardest things about sizing up is, you know, you kind of like you kind of see the numbers on the screen and it's like, okay, well, it's kind of like a, you know, kind of like a little bit of a video game or whatever. But like when you really start thinking about like the real world implications of those dollars, it's like, holy shit. Like you know, that's like, I could, you know, buy this car with that much money, or I could do this with that much money. It's like, you think about it and then you think about it like in terms of like a normal job, like how much money you make in a job. And it's like, geez, you know, like say, you know, say you trade in the morning, or for example, and it's like, oh, you wake up and like, you know, you get to the markets and you're there for a couple hours and you make $500. And it's like, oh, okay, that was great. You know, I had a good day. And yeah. But then like you think about it and it's like, man, $500 and you do the math on that. And it's like, fuck, that's like, what is that? Like 150 grand a year. If you can do that every day, like that's a lot of money, man. Like, you know, and then you kind of think about it. It's like, huh. And then you think about the flip side where it's like, okay, maybe you have a bad day and you lose $500 and it's like, oh my God, if I do that every day, I'm losing 150 grand a year. Right. Like it's just this constant like mental fuckery that you gotta fight off.
Speaking of that number, I think it was say Tuesday night. I was talking to I'm in this other chat where we're buying handguns right now because of the stupid ban. We all got gun licenses. Now, one of the guys, he's a real estate agent. He just has a bunch of cash right now, so he's just putting into something. He's got a new hobby. It's his new hobby. But then my buddy Matt, he introduced him to investing. Matt does like options and stuff like that. But the real estate agent got into the market, lost $150,000. He told me the other day. And I'm like, "Did you lose it? Like, is that realized?" He's like, "Yeah, I sold." I'm like, because I think that's an important point we should mention to people, where it's like there's realized gains and losses and there's unrealized, where it's like your stock is down, I don't know, like 60%, but it's unrealized. That means you didn't lose that money at all. You still own a piece of that company. And as long as you own a piece of that company, it could turn around at any given time because there's real people behind that company selling real products and putting real effort into it, right? But as soon as you realize that loss, you've already like, that's it, white flag. That you've accepted that loss is, that's it, right? And he
Yeah,
accepted the $150,000 write down. Like, shit.
that would sting. Yeah,
Yeah.
but there's no reason for that. Like, there's no reason for that. And like, you know, it's such a careful thing that we got to say, because it's not like we're telling you guys to hold everything like to zero. I don't know what the hell you guys own. I'm not telling you what to buy, and I'm not telling you when to buy or sell. But if you own something good, I mean, if you bought the damn company, you should be confident in the company. Not if you're trading something, if you invested in something, why are you selling it? Like, if you invested in something, to me, like, okay, you know, if you're not doing your research, that's your own problem and you could lose money. But like, to me, if you're going to invest in something, you know, I want to, like, you got to know the company. Like, what are they doing? Like, how much money are they making? Is this a good company? You don't need to be an expert. I mean, anybody can go on, you know, Yahoo Finance and you can find out enough stuff that'll tell you what's going on with the company, all their financials, you know, how many employees they have, get an idea of their products. Like, do you think it's something good for the future? All this kind of stuff. And like, if that don't make sense to you, then, you know, the stock prices sell off for 6 months and you look at their statements and they're still making money and the company's not struggling. Like, what the hell are you doing selling your stock? Like, that's just the stupidest thing you could do.
He was a headline researcher, like, so he just reads the headlines. He bought BlackBerry. I don't know if he had anything else, but his main thing was BlackBerry. And apparently he bought it because BlackBerry announced they're getting into self-driving. They're going to start writing software for self-driving. I'm like, really? Where the fuck did they come from? Like, who the fuck
Actually,
are they in this space?
I actually made a bunch of money shorting Black. Oh yeah, it
I
was on this day here. Look at that. Can you pull the chart up? Look at it. It was on this day right here.
my God.
This big fucking red day right there. I nailed that one. Or no, sorry, this is Bed Bath and Beyond. What am I talking about? What's the BlackBerry ticker?
BB,
I did hit that one.
I think it's just BB or BBM or BB. I think. Yeah.
Oh yeah, BlackBerry. Okay.
There you go.
Look.
It's an ugly chart, man. Look at that.
Oh yeah, I remember this. This looks like a small cap chart, man. What are you doing buying this for an investment?
Yeah.
Jesus Christ.
Yeah.
Because you know what this is, guys? Like, just look at this chart. I mean, you can know nothing about stocks and be like, okay, which way are we going? We're going down. We're going down for a long time, and there's nothing here that tell me to buy this. And look at, because this went up with fucking AMC and GME too, didn't it?
Mm-hmm.
Yeah, I remember that. So you know what happens now is look down here. You see, okay, let's go to the middle here. Let's go to where we are now. So this is our volume down here, right? This is how low our volume is. You can't even see it. You can't even see the volume down here when I zoom out into these big pushes. It's not even registering. So what does that tell me? That tells me that you have all this and you have all this, all that. You have all that volume, all these people that were super excited that threw all their money into this because they saw, oh my God, it was at $7 and in a week it ripped up to 14. It's up 100%. I'm going to put $1 million into this thing. And then it goes up another 100%. And they're like, oh my God, I'm going to be worth so much money. I'm going to put another $1 million into this thing. And then it tanks. And then they're like, oh shit. And then they hold on. And then it comes up again and they go, okay, we're good. It's starting to go up again. Like maybe I should put more money in. And they put more money in. And then it goes up and then it just tanks again. So now you have just a colossal amount of people above you. They're all sitting above you. And everybody up here wants to get the hell out of their position for at least break even. So if this price goes from $5, if it even goes up like close to $10, I bet you half of these guys just dump and it kills it because they're thinking, okay, $10 is a pretty nice, nice round psychological number. So if it gets close to there, they're just going to dump it. And like, honestly, like this is literally like a perfect chart. Like if you saw this thing gap up, it's a short every day of the week. It's a short. If this thing gaps, it's a short. I'll tell you right now, like no questions asked. That's exactly what I look for.
How funny is it? Like that first spike, it's so large. It's like, but that second spike is all the people that never learned the lesson the first time.
Well, it's funny. This one's even bigger volume too. Look, like if you zoom in,
I didn't notice that. No, but you know why? It's because you smart ass short sellers got in. It was like, all right, let's dump on these guys.
No, you know what that is? It's all the fucking longs because this thing ripped up and then they missed it and they're like, oh my God, I could have made so much money. So as soon as it started moving here, they're like, I'm going to put 10 times more money because look at what it did last time. It went from $8 to $28. It's doing it again. It's going to go from $10 to $80. And then it tanks. And now you have even more people trapped. That's what that is.
You're right. That sounds more realistic. I was giving too much credit.
But it's so clear. Like look at this, guys. Like if you look on the short time frames, I mean this block right here where we based at like $12, this is all your volume. Like this is all the people that are stuck. So look at this. Like these next few little pushes, like every time it gets into $12, which was where this thing bottomed out at, that's your support. That's where all these people are just like, oh my God. When that breaks, they're like, oh my God. If it gets back to that at all, I'm out. And then that's why you get look at this big red volume candle. You get a push back to that $12 area. A bunch of people are just like, I'm out. Like we're done. Push back again to that area. I'm out. Sell off. And then finally over here, we get a push up and then it gaps over that, and then we get this other stupid rip. And then the same thing happens here. Look, it sells back down, and then look, a little bit more volume coming in down here. A couple big days, and it touches 12, and I'm out again. Like, it's like, and then again here, look, another few months later, hits 12. Got to, 12.33, and it just sold off again. And then now it's just completely dead. So like anybody who was brilliant enough to hold through, 1, 2, 3, 4 opportunities to get out for a relatively small loss. Now they're just like, oh my God, if this thing even gets up to $8, I'm going to sell it because like it's just going to go to zero. That's what everybody's thinking, right? Like that's what you have to put yourself in the mindset of the people who bought this thing. And that's exactly what I do. Like when I'm short selling stuff, is like I put myself in the mindset and I'm like, okay, how many people are stuck in this thing? Where are they going to want to get out? And where they want to get out, that's where I want to get in.
Crazy. I wonder how many traders are playing this now.
Now, not many. There's nothing to play.
No, but you notice like if there's a spike every, I don't know, there's on daily, it looks like maybe every 2 weeks, 3 weeks, there's like a dump. It'll climb up a little bit and then like a little bit of a dump.
It would have to go up a lot though. Like if I was gonna short this, I'd want to see it like at least up kind of like in this 850 range. Like
Okay.
a decent gig. Because like something like this where it's like, if we were down here and we gapped up from like, 540 to 660, I mean, that's not enough. I mean, like, you're trying to make, 30, 40, because like then your next support would be here at $6, right? So even if we gapped right up over this to like, 650, 660, I mean, you need a push on the intraday to get in short, right? You can't just short the thing at the open. So you need some range. So like if we're talking, 20, 30 cents on a $6 stock, it's not enough.
So like this dumping though. Sorry. No, go ahead. Sorry.
No, I was just gonna say like it would have to get up like I would need to see it at like between $8 and $9 at least, because then at least it's like, okay, it's an $8 stock, like it could open at 780, push up to 850, and then tank down to $7 or $6. Like that's the move.
So I was just gonna say, those moves up, do you see all those giant top wicks? Like somebody's dunking on them every time it goes a little bit up.
Yeah, and it's always on volume too. Look at. So there's this one here, volume pushing to $11 and it sells off. Like big candle here, another big wick, and then it sells off. Like another one here. Oh, here this is again.
That's an ugly one.
Yeah, but look, this is exactly what I was saying again at the start of the podcast with the S&P with the lower volume. So look at the volume here. Big volume push into $12, comes down, and then it pushes through that level, but it pushes through it on lower volume, rejects below this prior high. Check this out. Right, so it rejects below that prior high. That's a short because we had less volume. We got to new highs, couldn't hold it. It was on less volume than the last time it got to those highs. Nobody cares. Nobody wants to buy it, push it up. That thing closes. That's that simple. That's the easiest way to trade it.
It's it's freaking interesting. But yeah, on the investment side though,
that was a bit of a tangent there.
No, but I was going to say on the investment side, like let's assume this is a decent company, just like got a little wild, right? You could buy, but then how would you get in? Is what you're basically doing is DCA, like dollar cost averaging. Like you never know where the bottoms are. It's just like, am I comfortable buying here? It's come down, I don't know, like say 60, 70%. Like let's just start sizing in maybe every week, every month, just set a certain amount of number aside and put your money into it. That's how you get into the market. Because nobody's going to be able to tell you like, oh, it's hit bottom. Like,
yeah, it doesn't have to be much. I mean, like I know a lot of people that invest $200 a month because that's all the free cash they have, and that's fine. You're putting in, $200 a month, and you just do that every month. That's like you're getting into the market. I mean, if you start doing that when you're 20 years old, start putting $100 in when you're 20 years old. I mean, by the time you're 30, that's going to be a shitload of money. Like you just keep increasing it as you can afford it. It's not like it's not something that you need to like starve yourself to be able to invest in the stock market. That's not the way it is. But like you have to be smart enough that like you can invest. Like you don't just want to you don't want to save cash because cash is just deflationary by nature, and you don't want to just kill yourself trying to invest in the stock market. You got to find the sweet spot where you still have money coming in so you can live and go out for dinner and buy yourself a new ATV or whatever the hell you want to play around with. Have some spending money. But then outside of that, I mean, what do you do? Invest your money. If you don't need it, and it saves me from myself because if I didn't invest my money, I'd be buying fucking toys every day.
That's a very good point. A lot of times I've trained myself years ago, but it's like instinctive now. Where it's like if I want to buy something, I'm like, okay, what's gonna be a better return? Putting this money into a stock like Tesla, whatever, something that I like, or buying like a computer or a laptop. And I'm just thinking in my head, well, if laptop is needed for work, then I can generate some revenue for it. But if I'm just like a gamer, like what the fuck am I doing? I'm just like burning cash. Right, that laptop today,
Yeah.
that whatever that cost me, it could be like $10,000, like 5, 6 years from now. It's like, what could I get then, right?
I think the exact same way, man. Anytime I buy like a big ticket item, like I bought a lawnmower like a couple months ago. It was like $4,000 or whatever after taxes, and like I needed it because I needed a new lawnmower. But I was like, and it's nice and everything. But I was like, once I buy it, I'm like, the whole time I'm thinking, I'm like fuck, this $4,000 in like 30 years would be like $60,000 if I put it in the markets. Like, like that's just the way that I think. So like I have this weird mentality where like when I buy something, I basically just like 10 times the value of it, and like that is how much I consider it costing. So if I buy something that's $1,000, it's $10,000 to me because I know what that money can do in the stock market.
That's the opportunity cost times X. Is it worth it times X?
Exactly. Yeah.
It's awesome. Do you
Yeah.
factor your time into it though? Because I started factoring my time into it. Like I eBayed a Galaxy Note 20. It's like 2 years old the other day. It was like $700 Canadian shipped and whatever, right? But the reason I got it is because my new job. I'm fucking on Instagram all day. Like it's just killing me. I need something bigger, like just right. It's like, and I found
Yeah.
myself like bitching on my phone because I'm typing so slow. I'm like, every time I type, I'm losing fractions of seconds, and add it all up throughout weeks and years. Like this could really save me some time if I got like a bigger phone that could do more, right? So I calculated that way too.
Yeah, yeah, I do the same thing. It's like my trading setup. Like you guys obviously can't see it, but I got like I got monitors wrapped all the way around me here. I got a TV. Like I got all kinds of stuff, right? So it's like yeah, I spent all this money on this setup, but like it pays for itself very quickly. Like I because I can see so many different charts at once. Like if I hit one trade because I had it up on one of my screens, that screen just paid for itself like immediately, right? So like that makes sense. Like again, same with the lawnmower, right? Like my old lawnmower was so shitty and slow, it would take me like 3 hours to cut my lawn. Now I can cut my lawn in 45 minutes. So that gives me another 2 hours that I can work and do like more productive stuff. So like, the $4,000, like sure, it's $4,000, but I get 2 hours extra every week that I can work. So to me that makes sense.
Incidentally, I think you just kind of like touched on the formula for like how people like if you're short on income or like you're tight on income, like how you can get ahead. You use that shitty lawnmower until it's done, like for X amount of years, however many years, you just suck that shit up because all the money that you're
Yeah.
saving, it's gonna add up to something later that you can use for something better and get your time back and get your investment back.
Yeah, yeah, that's a lot of people do that, man. That's one of the things I think is so poison. Like, well, I think we'll kind of wrap it up after this
Yeah.
one here, but I just wanted to touch on the social media thing. That's why I just think that like the social media side of things is so poisonous because like people just see like I know you that's your job and everything, but like not to that respect. I'm just saying that like people see so much stuff on there where it's like oh, I'm traveling, I'm doing this, I'm doing that, my life's great, I have all this stuff, and it's like okay, there's most of that stuff is either fake or you're just following like the 10 people out of the 10 billion that do have that kind of money. And then if they do have that kind of money and they're 18 years old and they have all this stuff, and it's like okay, well maybe their dad is a billionaire. Like you don't know, right? Like you can't put yourself in that situation. It's just gonna bum you out. So like I'm like I really don't go on social media much like at all anymore. Like I was gonna delete my Facebook, but the only reason I kept it is because I have Facebook Marketplace.
Yes, yes,
And I
yes.
invest in Facebook too.
Love
But
Facebook
yeah, it's
Marketplace.
like yeah, it's the best. But yeah, I just think a lot of people just like it just kills you to look at that kind of stuff. And like even with trading, I mean, you see all these people that are making like there's tons of people that make $1 million a day in the stock market. Like, don't worry about it. Like that's not you. Like you gotta start from where you're at and work your way up. It's no different than a job, right? Like where does everybody start? You go to public school and then you can go to college or university and then you get a job and then you work your way up, and it's like, oh, you see this CEO in New York and he's making $50 million a year. It's like, well, I bet you when he was 15 he was still just some kid in high school being an idiot. Like you get to that point over time. You can't compare your day one to somebody else's day 500. So just, I don't know. It's kind of irrelevant to the whole stock market thing, but I just think a lot of people forget that, just kind of get caught up in it all.
I got your back. I will wrap it up. I'll wrap it up in a bow. How it ties it back is that you should not compare yourself to anybody else but yourself. Just like your stock trading, you compare yourself to your previous performance, nobody else's performance, right? So it's just like the same thing in life, right? You compare yourself to where you start. Everybody starts at different spots, so you have to keep that into your consideration when you look at how far you've made it, right? You relative to somebody else, you might look like you're behind, but relative to where you started from, it's like, holy shit, you've gone a long way. So there it is.
Yeah, exactly. All right, wrap it up here. Thanks for tuning in, guys. We'll keep you posted on our thoughts. Hopefully we're right about the markets picking up again in the next little while. But if they sell off, then hold on to your hats, I guess.
I'm buying. I'm buying.
Yeah. See you guys.